GIC CEO Lim Chow Kiat joins me now. It's good to see you here in New York. He's going to be accepting the Business Council for International Understanding's Eisenhower Global Citizenship Award. The award recognizes accomplishments in social responsibility and sustainable development. So congratulations.
Thank you.
On that. Sustainable development has been a big focus for you in this fund. How do you invest around that?
Well, it is because GIC is a very long-term investor. So, we looked at companies, businesses which are sustainable in nature. So over many years, we have been doing that.
What about right now? I mean, some of the hopes for the green tech plays in the market have had terrible performance this year on the back of higher interest rates and some questions politically about whether they're going to get the funding from IRA.
Right. So interest rate is a real challenge for almost all asset classes, all business models in the sustainable space. We are finding actually lots of opportunities. For example, in the energy space, this whole energy transition needs a lot of capital. And GIC, given that our horizon is very long term, I think give us a special angle in that area. Interest rate, I think, will continue to pose a challenge for many asset classes. But if you stretch out, over a long period of time, in fact, with higher interest rate, or more accurately, higher asset yields, is actually a net positive.
So how are you playing the energy transition? What types of companies?
So generally, two buckets. The first would be the green tech, companies inventing new technologies, for example, in carbon capture, renewable energy. Lots of those companies benefiting, in fact, from the IRA. The second bucket, which is a bigger one, is on transition. Existing businesses or assets looking to go, sort of into the green area to get to the transition. They need a lot of CapEx capital.
This is Duke Energy, is that?
That's an example. So Duke Energy was an investment we made 2 years ago. We basically provided long-term capital to allow them to move away from coal-fired power plants to renewable energy. So I think that helped the company to kind of move away and transition into the new type of energy.
It's been a disappointing year for Duke Energy and some of the others. You say you're focused on the long term. So what are we talking about? What's the investment horizon?
Well, it depends, on the particular investment, but generally for infrastructure type of investment, it could be 10, 20-year type of horizons.
What percentage of the overall allocation, because you're in public markets, private markets, global markets, what percent is in U.S. stocks?
Well, U.S. is our biggest, take up the biggest allocation. It's about 40% across, multiple asset classes. In the equity space, both public and private, but also in real estate infrastructure and other types of asset classes.
What about U.S. tech, particularly? Because I know there's a lot of expertise at GIC on that.
U.S. tech is very important, I guess, to any investor, especially for a long-term investor like the GIC.
What's interesting within that to you, thematically?
Within that, I guess two big categories. Digitalization, includes all the software type of companies, as well as, of course, artificial intelligence.
So do you guys think that AI is hyped, or are you adding to exposure? And what types of companies?
Well, actually, in the short term, there's a little bit of hype. But actually, we remind ourselves that AI holds long-term promise. So we would, in fact, want to, while we are careful about short-term hype, we want to also make sure that we don't lose their attention over the long term. Within that ecosystem, there are many different parts. We are looking at all of them, even though for now we have more interest in areas like infrastructure, tooling, and then, in fact, some of the sort of big tech or existing tech companies. I think they can also make good use of AI to provide additional services to their customers.